New rules for the buy now, pay later sector to make it harder for providers and consumers. Rare bipartisanship in Parliament over the G7 and Quad meeting over the weekend. And New York City is sinking. It's Tuesday, the 23rd of May, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, your interview today is with Andrew Smith, the CEO of ASX-listed Credit Clear. It's a fascinating conversation.
Who would have thought that debt collectors were as sophisticated as they turned out to be? I'm probably showing my own ignorance here. We talk to Andrew all about what's happened post-COVID in terms of debt collections. And it's a great barometer of what's happening in the economy. Clearly, there's a lot more debt collecting going on, but we go into how it's done nowadays, where the biggest increases in activity are. Fascinating.
My favourite part is his reassurance that he doesn't have a baseball bat.
He does.
So he certainly kind of understands and acknowledges the reputation probably that the industry may have had in the past, but he talks you through how it has changed and just how modern it is and the role it has to play. So I found it really interesting. It's well worth a listen coming up a little bit later on. But in the meantime, Sean, the main story this morning is all about the buy now, pay later sector, which is going to be regulated under credit laws, and companies in the sector will have to decide if their products are suitable for their users under responsible lending obligations.
Yes, a lot of words and all that. But yesterday, Financial Services Minister Stephen Jones announced the changes. They'll very much change the economics of the buy now, pay later sector. The government will allow the responsible lending obligations, which currently apply to all credit providers except buy now, pay later groups, to be scaled to the risk involved for buy now, pay later products. Basically, the rules will apply, but they'll apply differently dependent on whether someone's borrowing tens of thousands of dollars or just a few $100s on their buy now, pay later card. The government will change the Credit Act and require providers to assess that buy now, pay later is not unsuitable for the customer. Buy now, pay later providers will also be required to hold an Australian credit licence. Now, there are about 7 million active buy now, pay later accounts out there. And keep in mind, many people have more than one buy now, pay later card, and the majority are used for products under $2,000. According to the Reserve Bank, the value of transactions in the sector last financial year was around $16 billion. Now, that's only about 2% of card purchases, relatively small, but it's growing very, very fast, and it's estimated there's about 160,000 merchants out there that use buy now, pay later products so consumers can access their goods.
There is a lot in that, Sean. What does it actually mean then for the sector? Is this going to be bad news?
Yes, I think so. I mean, it's probably not the death knell, but it's going to be, the sector's going to be battered and bruised by the end of it. At the moment, it's very easy to sign up for a buy now, pay later product, and it's cheap for the providers and for the customer. Now, the provider will have to do a lot more work to make sure the customer is suitable to receive a loan. That is not just the time. They need better systems. So market leader Afterpay, for example, is unlikely to be set up for the new rules, according to reports yesterday. Others, notably Commonwealth Bank and Zipco, have pretty much supported the changes all along. They have got systems in place, so therefore it probably won't be as expensive to them. For consumers, you and I, Michael, it's likely to be harder to get a buy now, pay later loan, at least if you don't have a great credit rating. Though, as we found out last week, Michael, you do have a great credit rating.
That's right. We discussed that in How Do They Afford That, our sister podcast, and that is actually a very good reason to go and have a listen to it about why it is so important to check your credit rating. Sorry, Sean, I really hijacked that for a free plug.
No, that's all right. And it'll also take more time to set up. Now, maybe that's not a bad thing. People who probably don't have great credit ratings should just take some time to think about whether or not they want one of these products. Certainly, the market has sold down companies which they think will be affected by it. Zip's share price was down about 2.5% yesterday. Block, which owns Afterpay, wasn't off as much, but obviously that's a much, much bigger company with lots of other parts to it. Sezzle, though, for example, closed down 14%. I think all in all, by the end of all that, not great news for the buy now, pay later providers.
So the companies will be a bit kind of battered by it. There's arguably better protections for consumers. What about the merchants that are using them as one of the main kind of point of sales? What's the impact going to be there, do you reckon?
So I think they shouldn't be overly affected, except if consumers aren't using the products as much, They obviously not turning over as much stock, so that will hit them. Now, you only want consumers buying stuff that they can afford. So I think that is the bottom line, and that's what this story is about. Buy now, pay later. Ever since its introduction, it's been argued that this is a credit product. They've always argued it isn't a credit product. It's now been captured in that area. So, I mean, I don't think these changes are bad, but it will have an impact on, the companies that use buy now, pay later as part of their business processes, and obviously on consumers.
All right, big story. How did local markets perform yesterday, Sean?
The S&P ASX 200 closed down 0.2% to 7,263 points. Now, for the first time in recent sessions, Michael, technology stocks led the way, followed by energy and healthcare companies. At the other end of the market, with the real estate investment trusts and the telcos. Among the large caps, WiseTech Global was up 2.5%. Now, that tech market leader is up nearly 50% this year and has more than doubled since June last year. Santos rose more than 2% yesterday. Fellow oil and gas major Woodside Energy rose 1%. Some of the lithium miners underperformed, though. CSL, Xero and Suncorp were all strong performers. The big banks were lower, as were Telstra and the large retailers.
And what about international markets?
Well, the debt limit talks in the US continue now that US President Joe Biden is back home. That's kind of the main story. But the G7 meeting in Japan over the weekend also had an impact. Biden said relations with China should improve very shortly, and that sent equity markets higher. Equities in Hong Kong, Japan, South Korea and mainland China all rose yesterday. The odd one out really was Australia. In commodities markets, oil is lower, as is gold. Coal's downward trend continues, though at about $160 a tonne. It's still well above its long-term average. And Michael, the Aussie dollar is trading just under 66.5 US cents.
Hey, Sean, just speaking of the debt limit discussions that are taking place in the US, that stat that I gave on the weekend edition, which I don't think really got the recognition that it deserved, it's just worth repeating, don't you think, that the US debt ceiling has been lifted 78 times, I think it was, since 1960. Isn't that just extraordinary that it just keeps on climbing? And that is a lot. I mean, that's more than annually.
It's kind of, there's this moral hazard involved in all this. When you just keep lifting the debt ceiling, no one really thinks it won't sort out. And so some commentators are saying, well, actually, if they don't sort it out in the next couple of weeks, the US will default. But most of us just think, they've done it before.
Yeah.
Don't know whether that's right or not, but
All right, there's a bit going on. We'll be back in a moment with the rest of the day's business news. Sean, Federal Parliament was back in session yesterday and Prime Minister Anthony Albanese, fresh from his weekend with world leaders. I don't know how fresh he would have been. It was a fairly kind of exhausting few days for him. But he said the four Quad nations will work to strengthen security and shore up clean energy supplies.
I wonder what it's like when you go to one of those sort of the sidelines of the G7 and then you run the Quad meetings. So you've got Narendra Modi there and Fumio Kishida in Japan and Joe Biden, and you're running the show. And you come back to Canberra, not Canberra specifically, no disrespect to Canberra, but it's kind of must be a bit of a letdown, do you think?
Yes. Yeah, there's all those videos online, that people returning to Australia after they've spent a year abroad, where they've been in kind of Europe or in America, and just how they get very affected by their time overseas, and suddenly everything that was just kind of normal to them here suddenly just doesn't compare to how it was. I imagine that's what it's like for Prime Minister Anthony Albanese now, kind of having to talk to, say, Peter Dutton and others in Parliament going, 2 days ago, I was chatting to Joe Biden.
You mean JB, off we go. Yeah. But mind you, he was talking a lot about it yesterday. He was spruiking a new clean energy pact he signed with Biden, saying the two agreed that climate change action is a national security issue. Albanese said the pact will expand and diversify Australia's clean energy supply and will support the development of clean hydrogen, battery technologies and other clean energy products. Opposition leader Peter Dutton congratulated the Prime Minister for his engagement with President Biden and other world leaders at the weekend G7 summit in Hiroshima. I just thought it was a nice moment of bipartisanship, which of course it didn't last long, but just for the few minutes, I actually thought it was good.
Just very, very brief.
Yeah. And just quickly before we leave politics, Michael, the date for the by-election in the Queensland seat of Fadden is July 15. That's to replace former Coalition Minister Stuart Robert, who will retire from politics. It's held by the Coalition 10.5% majority, so it probably won't go to Labor, but everyone will be watching it very closely.
Yeah, sure will be. Now, how about this one, Sean? This is pretty alarming. The NDIS probably breached its 2023 financial year forecast for participants in early April, with nearly 600,000 participants.
Yes, the program is experiencing strong enrolment rates among children with autism in particular, and according to the National Disability Insurance Agency quarterly report, there were 592,059 participants at the end of March. About 200 people are joining this scheme each day. That means the forecast number for this financial year has almost definitely been breached. If enrolment rates hold steady at about 6,000 sign-ups per month, the program will exceed its June 2024 projection of 646,000 by the end of this year. The NDIA forecasts the program will have more than 1 million participants by 2032, cost close to $100 billion annually. It is a massive spend. More than 50% of NDIS participants under the age of 18 have autism, while 21% have developmental delay. 11% of boys aged between 5 and 7, 11%, 1 in 9, are NDIS participants, while 5% of girls in this age bracket are also on the scheme.
That is extraordinary.
Frightening. Frightening. I mean, they all deserve to be on it, so no question there. But maybe we need to do something about early intervention for some of these kids.
Sean, Indonesian President Joko Widodo is expected to visit Australia in early July as part of an annual leaders meeting between the two countries, which was reinstated last year.
That's right. Collaborating around the electric vehicle supply chain is likely to be high on the agenda. Indonesia wants to become a centre for battery production, and of course, it's interested in Australian lithium. Both countries are also keen to build on the Indonesia-Australia Comprehensive Economic Partnership Free Trade Pact that was ratified shortly before the pandemic began. More recently, Indo has been critical of Australia acquiring nuclear-powered submarines that will travel through international waters in the region. However, the president softened his stance earlier this month, saying Indonesia and its neighbours should view the Quad dialogue as a partner to, and not a competitor of, ASEAN, which of course is the main regional grouping. Also, Michael, yesterday, Indian Prime Minister Narendra Modi touched down in Sydney. He met with the Prime Minister.
Yeah, there sure is a bit going on. Now, Sean, BHP has warned that the Albanese government's proposed same job, same pay laws will cost the big Australian up to $1.3 billion annually and could cause labour hire demand to tumble.
The same job, same pay policy is designed to crack down on worker exploitation by labour hire firms, and it's part of Labor's second wave of industrial relations changes. They're set to be introduced later in the year. BHP warned that without proper consideration, the reforms could discourage enterprise bargaining, drive inflation higher, undermine productivity, threaten jobs, and undermine the government's recent bargaining reforms. Federal Employment and Workplace Relations Minister Tony Burke hit back immediately, saying it was unclear how BHP has produced a costing on legislation that has not yet been finalised or written. BHP then came back, said this $1.3 billion financial impact is the equivalent to the labour cost of approximately 5,000 full-time employees across its operational workforce.
The scandal embracing PwC is getting worse, Sean. We've talked about this a bit lately, but now Federal Treasurer Jim Chalmers has described the leaking of confidential government information to benefit the accounting firm as inexcusable.
Chalmers told ABC Radio that Treasury is working on adopting additional measures to crack down on the leaking of confidential government information by consultancies. He said that PwC experience is deeply, deeply troubling, and he'll have more to say on changes in the sector in due course. A PwC partner used information gained by working with the federal government to further the firm's interests, despite signing a confidentiality clause. That partner, Peter Collins, has been deregistered, but there's pressure growing to further punish PwC. Now, just an aside to this story, the Sydney Morning Herald is reporting today that the big four consulting firms, PwC, EY, Deloitte and KPMG, have increased their federal business by 400% over the past decade. Incredible. Funny thing, political donations have also increased. There you go.
Now, Sean, the share price of payment system provider Tyro tumbled 17% yesterday after its suitor, private equity group Potentia Capital, walked away from the deal.
This has been going for a long time. The initial offer was made in September last year at $1.27 a share. That was rejected, and eventually Potentia lobbed a $1.60 a share bid. It also had, by that point, won the support of Mike Cannon-Brookes, which is a large shareholder in Tyro. Now, the private equity group was undertaking due diligence. It began that late last year, and now it's pulled the pin. According to media reports, as of late last week, investors were confident that the deal would get done at a price of around $1.75. It just seems that the bidders didn't want to pay as much money today as they did late last year. And maybe that's because the economy has slowed somewhat. Mind you, Tyro last week updated its earnings forecasts. Anyway, maybe it just took too long to get the deal done. It's over.
All right, turning to international news now. We've pretty much ignored the Jeffrey Epstein saga, Sean, but some pretty significant business leaders have now been caught up in it, including Microsoft founder Bill Gates.
Yes, Epstein is a convicted pedophile who killed himself in jail in 2019. His contact book had many high-profile names in it, including Prince Andrew, of course. He's pretty much been forced aside from royal duties as a result of that relationship with Epstein and photos and things like that. Now the Wall Street Journal is reporting that Epstein threatened to expose Bill Gates over an alleged affair he had with a Russian bridge player in her 20s, Gates having had the affair. This is according to the report. Now, Epstein threatened to expose the affair unless Mr. Gates cooperated with a fund he was trying to raise. Now, a spokesperson for Gates said he met with Epstein solely for philanthropic purposes. Epstein failed to win Gates' support to back a charitable fund. Now, according to the spokesperson, having failed repeatedly to draw Mr. Gates beyond these matters, Epstein tried unsuccessfully to leverage a past relationship to threaten Mr. Gates. Not a very good person. Jeffrey Epstein?
No, certainly not. And this is just such a murky, murky story. All of it is just one of those sagas that feels like we will still be hearing about this kind of thing for quite some time to come. Now, Sean, we mentioned this one at the top of the show, and I was quite intrigued by it. New York apparently needs to stop building skyscrapers if it wants to avoid sinking as oceans rise.
We already know that climate change poses a threat to New York City. That's about 8.4 million people on Manhattan. Now a study headed by the United States Geological Survey suggests development is exacerbating the dangers faced by the city, given the sea level is predicted to rise by about 1.5 metres by the end of the century. There are around 1 million buildings in New York City, weighing an estimated 771 million tonnes. Get your head around that one. That's according to a report in the Telegraph of London. And the city is already sinking by about 1 or 2 millimetres a year. The greatest threat is faced by Lower Manhattan and parts of the boroughs of Brooklyn and Queens. New York City faces accelerating inundation risk from sea level rise, subsidence, and increasing storm intensity, the study says, saying that 2 recent hurricanes caused casualties and heavy damage in New York City. Despite the threat, the authors said the response from authorities had been inadequate, with 90% of the buildings erected in areas at risk of flooding after Hurricane Sandy have not been built to the required standard. Quite amazing.
So just to be clear on this, there's no way to actually stop it from sinking at its current rate. They can just prevent it sinking faster by not building more skyscrapers.
And the other part of it is anything they do build really should be able to withstand flooding.
Or be made out of like pillows or something really light.
Or be made out of pillows, yes, possibly. I'm not sure how that works on the 58th floor or whatever.
I don't know. Honestly, pillows was the first thing that came into my head. And in hindsight, I regret it, but I'm going to stick with it. All right. Up next is the Fear and Greed Daily interview. Andrew Smith is your guest today, CEO of ASX-listed company Credit Clear, and also a long-time listener of the podcast, and probably actually a most enthusiastic advocate.
I think so. He's a modern-day debt collector, though. Very sophisticated, the tools they use, and a very interesting chat because he gets a great read on the economy, on what's happening. And what he says is that there are many, many more debts needing to be collected now than there was 12 months ago. Yeah,
it's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Well worth a listen. Thank you very much, Sean.
Thank you, Michael.
It's Tuesday, the 23rd of May, 2023. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, Twitter, and Facebook, and stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, Alexa, play the Fear and Greed podcast to get the latest episode, and you can grab yours now at amazon.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.